It's Brian. Hope you're doing well. Today it's Wednesday, middle of the week, July 15th, ready to come in, do just a quick pre-market analysis, see what we're looking at, potential areas to trade from, ideas for the day, and maybe if I have any other thoughts about anything, I'll share that with you too. So let's go ahead and get to it. Starting off over, oh wait, where's my screen? Starting off over here with news. There's a lot of Canadian news today coming up. We, manufacturing sales, Bank of Canada, monetary statements, rate statements, followed by the Bank of Canada press conference. So this will be pretty impactful to the CAD. So if you're trading forex, obviously, looking at CAD cross pairs, probably want to stay out for most of the morning simply because of what's occurring with the news releases there. We do have some news coming up for crude, which could be a driver. I know, just kind of reading through some of the blurbs that have been popping up so far this morning, looks like they're planning to extend. Well, it's conflicting information, right? Some say there's no proposal to extend the cuts. OPEC says they're gonna extend the cuts. Who knows? So again, like with everything else, everyone's just guessing, until actual announcements are made. So, but the crude oil inventories report, even though it's a medium impact, could have a high impact trickle down into other instruments. If you're trading oil, you may want to wait until after 10:30 Eastern time when that news comes out to actually trade. So let the news hit and then trade what actually occurs after that. I know it's exciting to want to trade news, but it's more of a gamble than anything because, again, no one, just like with everything else in the market, no one knows what's going to happen. We have our gut instinct of what's going to happen, and millions of other people have that same gut instinct, and the ones with the most money are going to push the market that direction. So us as a little retail trader, I say it all the time, we don't need to be jumping in front of any trains, to try to stop them because we're just going to get run over. The other analogy I like to use is an elephant, right? If you're a little insect trying to steer the elephant in a different direction, it's not going to happen. You just want to be on the back of the elephant going for the ride. So that's how I feel about news. And people are going to have other opinions, and there's nothing wrong with that. To each his own. There's no right way to do it, but in my opinion, I feel like news is one of those things. It's a big catalyst. It can be really exciting. It can certainly be that reversal point for markets. But rather than trying to front run it, let the news happen, see what the market thinks of that news and how it's reacting to it, and then just simply be part of that movement afterwards, right? So anyway, with that said, let's pop over here. Let's quickly run through. We're going to start with forex. We'll head over to futures, and then we'll go into a little bit of crypto with ETH and Bitcoin. And oh, by the way, I didn't mention it. I'm going to be out next week, all week, so we're not going to have any daily updates Monday to Friday next week. We're actually going to get a little holiday in, so been itching to travel. I'd have to do it domestically because can't go anywhere. Nobody takes Americans right now. Anyway, let's go over here and have a quick look at what's happening in the forex land. As we're getting things started, we've not really got a whole lot to look at. Most of our major currencies are actually trading together. We look at the pound, we look at the Canadian, look at the euro, look at the yen. They're all pretty much hovering together. And if we look at ranges coming into the day, majority of our currencies that would typically be fairly active have moved fractions of their typical movement, which again is evident looking at how they're trading right with one another through here. The USD is showing weakness coming into the session, and that's typical. We've seen kind of a big run up in our indexes, and as we've got that situation where it's quote risk off, or risk on rather. You've got money flowing into the stock market. Things are pushing higher there. It's flowing out of the U.S. dollar, so you'd expect the dollar to see a little bit of weakness there. It's all kind of interconnected, right? So it's expected the U.S. dollar would be moving down just based on what we've seen in overnight trading on most of our indexes out there. So USD is weakening. We could be looking at some potential USD trades. However, what would be paired against? The Canadian, but we've got CAD news coming up all morning, so the Canadian's out for us. US versus the yen isn't typically a high-ranging currency pair, and if we look at that for the day, I mean, it's already moved 44 pips, and its average is about anywhere from 50 to 60. So not a whole lot of opportunity there, I don't think. Aussie USD, maybe. I mean, again, it's moved 60, averages 56-ish on the 15-day, up to 80 on the last 30. But that longer term got a little bit skewed by a couple of big days that happened a couple weeks ago. I'm not really seeing any real opportunity. Pound USD, 88 on an average of 100. It's just I don't know. I don't really see anything that's jumping out at me. When I look at this, I don't really see anything that just jumps off the page going, hey, this is a great trade, take it. And that's what we want to look for. You want to look for that nice pattern of divergence that can continue on. So maybe something that was trading kind of with one another, and then as we're leading up to the US session begins to diverge and move away, and one's being more heavily bought coming into the session, one's being heavily sold coming into the session, and that's what we'd want to be able to take advantage of. And I'm just my cat apparently has something to say. He must be seeing how the S&P was having this face melting rally earlier, and then has some commentary on it for me. Anyway, so that's what we're looking for. We're looking for something for that divergence to be occurring, where we've got a currency that's being heavily bought, a currency that's being heavily sold coming into the session, and I'm not seeing it. So we're gonna pass. We're just gonna nothing to do there. Nothing to see here, folks. Just move on. So we'll just move on. We're gonna leave Forex and not really worry about what we should be doing there. Let's have a look at futures. The futures market this morning. Starting off with the S&P, we mentioned yesterday 4-hour trend is up. 30-minute trend has flipped to a long bias. So we've got 4-hour bias is long, 30-minute bias is long. Yesterday we had a short bias, and we stayed out of the market. This morning we have a long bias. We've just had this crazy move, gapped up. So we've got a gap that has to fill here. We gapped up overnight, or not overnight, but as regular session and off session began, and here we are in this crazy rally, 32.27 right now, which is a new high since our extreme lows following the initial the beginning of the pandemic. This does push us into profit for 2020. So the S&P is on a plus right now for 2020 so far. A lot of things about this scare me a little bit. This gap, even though we're long here, and we have a long bias, I really would only want to go long if we get kind of a significant pullback here. Not to say it just can't keep trucking on. It absolutely can just keep trucking on. But for me, I would rather see this pull back and take it long from maybe 3,200. I'd like to see it come back and fill this gap, back down to 3190, 3180, and that would be the spot to look at to see if we can take it long from there. It does worry me a little bit, the gap. So taking breakout, high breakouts would be a little more risk than I'd want to see. So, we are in a long bias and we should be looking for long trades in a long bias. But for me, I'd like to see it pull back to a key level. And key levels are a few places here. Just looking on the 4 hour, 3190 was key. It's the level that's been on the chart. And just recently, we'd seen 3190 tested and retested a few times. When it broke through there, 3200, which is a whole number, kind of the top of that level, we can see 3200 being tested and retested. So, I guess if anything, pullbacks 3218, 3220 is that potential area. But I mean, I'd really rather see it back here, retesting, this area in order to take it long again. So I'd caution like a top level breakout style trade today. For me, I think it'd be better to look here at this gap being filled at some point and trade from there. So the key, which is the key every day, really, right? It's nothing new. The key every day is to be patient and wait for the best trading opportunity. Wait for the trading opportunity that best meets the plan, and then be prepared to be wrong. I mean, if we're waiting for it to come back to 3190, say 3200, 31, maybe you split the difference and say 3195, but there's with anything in support or resistance, we draw a line on the chart, right? We draw a line and we say, okay, top, it's 3190. The reality is, and we've talked about this before, it's a range. You've got a support level, and there's a top edge of that level, and there's a bottom edge of that level. So there's really kind of a range for support and resistance. So you're up here, you're trading up here, and you're waiting for it to come down. Will it come down right to a specific, pick a number? Yeah, it might hit that number specifically. But if you really look at it, there's a top level of that range and a bottom level of that range. So the support and resistance is an area more than just a specific line, which is why I always say the area of, right? So anyway, if you're looking for it to pull back to 3190, it's going to have a lot of momentum to get back to 3190. So at that point, that becomes kind of a pucker moment too, right? If you're looking to go long off of 3190, you're going long into the face of a big red candle that's a lot of momentum pulling back there. Key is to really be patient and see how a price reacts around if it does come back. If it comes back to 3190, how does it react around there? Is it breaking through with a lot of momentum and closing below, and what's the next candle doing? Is it starting to move back up above that? How are we seeing price reacting around that 3190 level? And then if we're hit it, pull back a little bit, and it's looking like price is leveling out and we're finding buyers at that area, then we'd want to take it long again from there. The other way is to utilize the method that we've talked about here, and we're utilizing in the account challenge, which is look at your bias on a 4 hour and a 30 minute, and then wait for price to make lower highs and lower lows in an uptrend, lower highs and lower lows, and then follow our potential entry point down based on the close of that previous lower high, and have a stop loss at the bottom of that previous lower low, and just follow it down. And eventually, if during the trading time, because you're not going to do that all day long, you've got a window, if it breaks out of that, then we take the long from there. So we're getting kind of the best of both worlds. And if it really has a lot of momentum and moves and breaks through a point where we're not confident that we've still got a long trend, then we just bail out and don't trade that day. Right? But for right now, be really patient. Trading with emotion, we do a lot of things when we see big movements happening on our charts, and we start trading with emotion. It's going to get us in, at kind of the worst possible moment, and it gets us out at the worst possible moment when we're trading with emotion. We're chasing things. We're not taking calculated risk based on something that's quantifiable in the marketplace. We're trading our gut, and our gut, usually kicks in when pain points are at their highest. So keep that in mind. So anyway, what's the trade idea here for the S&P? The trade idea, probably been talking for way too long on this. So we're in a up bias, so the long bias and the 4-hour long bias and 30-minute. I think the trade idea here is to wait for a pullback, and the pullback would be to one of these key levels. We're marked 32.20, 32.18 here on our 4-hour. So this definitely is a key area. So you could wait for a pullback to 32.20 and go long from here. I think the better play, and it may not happen today, it may take a couple of days, but I think the better play is to wait for it to pull back, either back to 3,200 or down to 31.90, and see if we can get back a little bit to fill this gap, and then look to buy off of that. Of course, keeping in mind other things that might have occurred leading up to that, because if it does turn, there's going to be a lot of momentum behind it, and there could be other things driving that downward motion. Remember, there's a lot still going on with where we are in the coronavirus crisis. Whatever side of the coin you believe on coronavirus, doesn't matter. The reality is there's a lot of political posturing around it, and states are closing. Again, I shouldn't say they're closing, but they're making big rollback changes, and there are still discussions around some states potentially rolling all the way back to a kind of a lockdown again. So I don't know. I mean, I was out yesterday for a meeting, and there were no cars on the road at 6:30. It was weird driving through Dallas with no traffic. I wish I had driven my play car. I was in my wife's car. I wish I had my play car because the roads were wide open. I could have some fun. But anyway, yeah, there's a lot more to come with this, and I'm kind of concerned about the levels where we are with the S&P. If you can't tell, I'm a little bit in an iffy moment, but I would rather see this gap be filled to buy from it rather than just trying to buy off the top of where we are. So 32.18, 32.20 key level, looking to potentially buy off of. I'd rather see 31.90, 3200 as the buy levels here. If it does pull back there, though, please use a stop loss. Be prepared to be wrong. If you're going long on it, be prepared to be wrong. Same if you're going short. Be prepared to be wrong. It's nothing wrong with being contrarian and looking at these key levels for reversals. Just be prepared to be wrong. Whatever we do, manage your risk. Manage your risk first. It's the defense that's going to win the game over the long term. That's what we're in. We're in a long-term game. We've got to play defense in order to be able to last. So anyway, moving on. Crude back into a confirmed up bias on the 4-hour, up bias on the 30 minutes. So we're long bias on both of these. So same thing here. We'd be looking for pullbacks. Excuse me. Either a pullback down to 40.50 here, looking to buy off of this pullback to here, or 41. Big level. It's been so well respected. It's just we've repelled off of 31 over. It's been tested and tested and tested and tested and tested at 41. So a break of 41 would be a potential opportunity to go long as well. So you could look at potentially going long, break of 41, or pullbacks down to 40.50. Now remember again though, with crude, there's news coming up. There's news at 9:30 Central, 10:30 Eastern time, and that could be impactful to what we're seeing here. So just take that with a grain of salt. If you're going to enter something now or at the start of the session, be aware that there's news coming up very shortly as the session gets as the regular trading hours get underway, that could potentially throw some fuel on the fire for crude. Again, not trying to front run it. Don't try to jump out there anticipating what news is going to be based on what you're seeing in tweets and headlines, because no one really knows until it actually happens and what's released. But just be aware, the bias is long. So until that flips, you'd be looking for long trades, and that long trade idea would be either a buy as a break of 41 or buy on a pullback to 40.50. See where it goes from there. Gold is it's still a long bias where the intraday, the 30-minute here has turned on us a little bit, but technically, you know, we're still in a long bias on gold, and gold, we'd be looking for buy opportunities. You know, maybe a break here of 1810. If we break 1810, good spot to look to continue to look for longs on there. If this continues to fall, you know, especially as we approach 1800, 1800 strong area. It took a lot, just like 1700, right? It took a lot to crack through 1800. We're finally above it. We've been testing it a bit here. So if it does pull back to 1800, that could be another buy opportunity. So you could look for 1810 as a level to break through, looking to go higher. If you're waiting for some real movement and confirmation, 1815, but that's getting up there. I'd rather see 1810 if it can break through this. You know, if it can truly break through it and hold through it, that would be a spot to go long. It is still a long bias on these. However, you know, 1810, it has broken below, closing below. So if you're just trading straight support and resistance and not trading bias on it, that would tell you, hey, maybe we're looking to go lower from there. But I like to see, you know, long bias here, long bias here. If it crushes through 1810, that'd be a spot to look for continued long. So there's some ideas around that. The key with everything is just to be patient. Wait, you know what you're going to do. That's what you take the time to do before the regular session begins. Take the time to look at what's happening. Say, you know, if this occurs and this occurs and this occurs, then I'm going to take a trade. And if those things don't occur, then I'm not going to take a trade. Yeah, if those things do occur and I do take a trade, here's how much I'm willing to risk. Here's where I'm going to place my stop loss. Here's where I'm willing to enter. Here's where I want to take profit if things go this far. Here's how I'm going to manage that trade. If these things happen intraday while I'm in that trade, here's how I plan to manage on the way out. Have a plan and know what you're going to do. Don't just make it up on the fly as the session starts and you know, price starts moving around and you're seeing this activity and you're going, oh my gosh, there's something happening, I need to be part of it. Have the plan beforehand. Commit to that plan. Have a defensive part of that plan, right? All right, crypto. What's happening in crypto? We're still technically in long biases on both ETH and Bitcoin. However, it's this one over here. However, Bitcoin, you know, like we said yesterday, it's really consolidating. And same with ETH. We've got a pretty tight channel here that we're in. So looks like, you know, some decision points on this, but the bias is still long. So, you know, what you could do is you could just bracket an order in here. You could bracket something in same levels we were talking about yesterday. You know, if we're looking at 242 as a top, and we're looking around here at 236 down at the bottom, 237 as a bottom, and just bracket it in. Buy if it breaks through here, settle if it breaks down below. And the same thing on Bitcoin. You know, you could set up your channel here, around 9,300, and a bottom, around 9,175. And if it breaks through that, buy it. And if it breaks through the bottom, sell it. It definitely, as things flatten out like this, it becomes a big decision point. And the volatility in crypto is really interesting. When it breaks out of a channel, it typically breaks out with quite a bit of momentum. So whichever direction that might be. If you're trading with the trend, you would just set up your long trade opportunity, just the top side, and wait for it to break through the top, and then let it roll from there. So that's it. I think we've hit all the markets we want to talk about. We've given some trade ideas around where things could possibly go. The biggest thing with all of it is ultimately come up with a plan that best suits you, suits your account, suits your specific risk tolerance, and then execute that plan. And I know I sound like a broken record, and I say that every day, but it's true. Have a plan before you go in, and then trade that plan, secure that plan. That's what it's going to take to be successful over the long term. We can all get lucky and hit a home run once in a while, but the consistency is what helps us stay in the race for more than just a few months or a year or two, right? All right, so that's it for now. Have a great day. If we end up having a trade that meets the criteria that we've talked about for the account challenge, and that criteria, by the way, again, just to reiterate it, is we're looking for trend, whether it's an uptrend or a downtrend. So we're looking for, confirmation of bias in a certain direction. That means we're looking to trade that direction. Then if we're in an uptrend, for example, if the bias is long on the 4-hour and the 30-minute, then we're looking for price to make lower highs and lower lows, and then we're trailing our entry points down based on that. And that's really just for about the first couple hours of the session. And if we have a trade that meets that criteria, we'll take it, we'll talk about it. If not, then we don't trade. And that's the beauty of a super simple system. But you have to be prepared not to trade. Sometimes you don't trade every day. Sometimes you go a week without trading. You might go 2 weeks without trading. That's okay. You're fine. You're being consistent in your process. Right? So anyway, that's it for now. Have a great day. We'll talk to you soon. Bye.